Hey everybody, welcome to another video, and today I'm going to be going over ChargePoint. If you've never heard of them, they're a really large EV charging company in the US. ChargePoint manufactures and sells their hardware to customers, so they don't own any of their stations. But they do have their big ChargePoint network, and all of their customers have to pay a recurring cloud subscription fee in order to keep their charger on the ChargePoint network. So what you're seeing now is ChargePoint stock pulled up on Yahoo Finance. They're listed on the New York Stock Exchange under the ticker CHPT. Each share is trading at $12.16, and their total market cap is $4.155 billion. We can see on this chart that ChargePoint has been pretty volatile over the last year. You can see at the end of March here, they were at almost $20 per share. But more recently, at the end of December last year, they were at $8.50. So the stock has come up a little bit since then, but it's not back to where it was at those all-time highs. Moving on to ChargePoint's balance sheet, we can see they've reported cash and cash equivalents of $188 million. This was as of October 31st last year, so all of these numbers have certainly changed, but we don't have a newer balance sheet, any newer financial statements from ChargePoint yet, because their fiscal year ends on January 31st. Now another thing we're seeing here is the short-term investments of $209 million. Some companies don't have any short-term investments, but basically this is usually when a company has a lot of cash on hand, perhaps after going public, just like ChargePoint did. So this line is a fairly liquid, dollar amount there. These aren't really very long-term commitments. That's why they're called short-term investments. So it's good to see $209 million of that in addition to the $188 million in cash. Now next up is the accounts receivable at $123 million. The accounts receivable and the inventories and prepaid expenses, all of these items have been increasing since the previous quarter. Ideally, you want those accounts receivable to go through and become cash. Same thing with the inventories. This is basically unsold chargers at the moment. They're going to be selling these, but still, they've got $62 million just tied up in inventories at the moment. And then prepaid expenses as well are sitting at $58 million. Now all of these current assets, they're totaling up to $641.6 million. Now moving on to the long-term assets, we've got property and equipment here at the top at $38.7 million. Now ChargePoint doesn't own their charging stations, so theirs is considerably lower than some other charging companies, such as EVgo or Volta, for example. Those two companies, they own all of their chargers, so they've got a lot of value tied up in their chargers. Both of those companies, they're worth less than ChargePoint as far as the market cap goes, but they've got like hundreds of millions of dollars of property and equipment. So, it's a totally different business model from what ChargePoint does. Now, ChargePoint isn't totally unique here. There's plenty of other companies that just sell the hardware. Probably some of the biggest ones would be like ABB, for example, or Tritium. Both of these companies, they sell their hardware just like ChargePoint does. So, there's basically two main business models here among the charging companies. Continuing on, there's intangible assets at $89.6 million, and then there's the operating lease right-of-use assets at $21.89 million. Now, I'd like to go over this briefly as well. This ties back to the property and equipment. For those companies that own their chargers, they're going to have more of these operating lease right-of-use assets. Basically what these are is it's the little chunk of land that a charging company is going to lease out from a site host to have their charger there. But ChargePoint, again, they don't own their chargers, so they don't have quite as much of these assets as somebody like EVgo would. Now ChargePoint also has $202 million of goodwill. I think almost all of that came from the two big acquisitions they've made over the past couple years. Then they've also got other assets of just a bit under $7 million. Now all of these assets put together add up to their total assets of a bit over $1 billion. Moving on to their liabilities, we can see they've got $44.5 million of accounts payable. They've got $111.9 million of accrued and other current liabilities. And they've got $81.9 million of deferred revenue. And then all three of those combined give them their $238.3 million of current liabilities. Non-current deferred revenue is at $93.3 million. Non-current debt is at $294 million. I think this one is pretty important, of course, because, it's such a large number, and this is purely debt. They've got operating lease liabilities of $22.3 million, deferred tax liabilities of $12.3 million, and other long-term liabilities of $1 million. All of those liabilities combined give them their total liabilities of $662 million. Taking their total assets of $1 billion and subtracting their total liabilities of $662 million gives us a book value of $338.59 million. Now, in my opinion, this isn't the greatest book value, but it's really not bad. It's really weighed down by the amount of debt they've got. But there's certainly companies that have much worse book values. Plenty of companies out there have a negative book value. So it's good that they at least have a positive book value. Moving on to ChargePoint's income statement, we can see they've got $97.5 million of revenue from the networked charging systems category. This is pretty much the sale of the hardware itself. So this is not the sale of electricity, again, because they don't own their chargers. This is the sale of their hardware. So that came in at $97.5 million. Then there's those subscriptions that I mentioned in the beginning of the video, where their customers, they need to pay this subscription in order to stay on the ChargePoint network. They had $21.67 million of that for this quarter, and then they had $6 million of other revenue as well, giving them total revenues of $125.3 million. Moving down to the costs of revenues, we can see the same three categories from above, starting with the network's charging systems category at $85.8 million. There's the subscriptions at $13.4 million, and then the other category at $3.4 million. Now you'll notice that they're getting much better margins on their subscriptions revenue. Those networked charging systems, those are only giving them about 12% margin, whereas those subscriptions are more like 37%. Now, adding all of their costs of revenues together, we get total costs of revenues of $102.6 million and a gross profit of $22.68 million. Moving down to their operating expenses, we can see they've got $48.1 million of research and development expenses. Sales and marketing came in at $35.4 million, and the general and administrative expenses came in at $22.4 million. All three of those combined gave them total operating expenses of $105.9 million. This was actually a little bit lower than where it was in the previous quarter. Back then it was at $108.5 million. So it's good to see their operating expenses actually declining a little bit. Then subtracting those operating expenses from their gross profit gave ChargePoint a loss of operations of $83.3 million. They had interest income of almost $2 million, interest expenses of $2.6 million, and other expenses at almost $1 million. Benefit from income taxes actually cut the number down by $442,000, and all of this combined gave ChargePoint a net loss of $84.5 million. So having looked at the financials, we can see that ChargePoint still isn't profitable, and they probably won't be for quite some time. However, their balance sheet is better than some other EV charging companies. Again, like I had mentioned as we went through there, they've got a positive book value, while some other EV charging companies have a negative book value. So that's one thing that's pretty good for ChargePoint. That's definitely something that's going to matter a lot if it comes down to an acquisition. Now, I don't see that happening anytime soon for ChargePoint because their balance sheet is fairly strong at the moment. I don't think they're at too much risk of going bankrupt, in the very near future here. They do have a lot of debt on their balance sheet, and a lot of that was provided in this quarter we just looked at. So although they're in a fairly good spot right now with cash, that might not necessarily be the case if they don't continue to raise funds. And in this recession, there's some pretty high interest rates, so it's fairly expensive to take on a lot of debt like that, and equity is fairly hard to come by as well. That being said, ChargePoint stock is at $4.15 billion, so if they did need to do some share dilution to raise some funds, there's quite a lot there to tap into, but if they wanted to raise a very significant amount from there, it would significantly dilute the stock. Now, I think ChargePoint is going to be fine for the time being with the amount of cash and short-term investments they've got, but I'm sure at some point they're going to need to raise more funds. Hopefully the economy will be in a better place once the time comes for them to raise more money, but for the time being, I'm not holding any ChargePoint stock. That being said, I do think ChargePoint is one of the better EV charging stocks, but I think there's a lot more opportunities outside of the EV charging industry. That's it for today. I hope everybody enjoyed, and I'll see all of you in the next video.